Well, ladies and gentlemen, welcome back to the channel. Today was a big day for stocks, and stocks ripped higher following Fed Jerome Powell. This could lead to an end-of-the-year rally, which could see AMC stock going much higher. To the contrary, there's also that possibility that we sell off coming over the next couple of days. There's a big catalyst coming out tomorrow that will move the markets you need to know as an investor in AMC or just as a broad investor in our markets. We're going to go ahead and get into it. Everything you need to know on Powell, AMC, as well as the catalyst coming out tomorrow. If this is your first time to the channel and well, maybe consider sticking around a while. Hit that like button as well as subscribe to the channel if you guys like what we have to offer here. You want to take it a step further and come trade with us live in real time. I post my notifications every time I make a trade. Others post theirs as well as source great news. Well, link down below in the description of this video. Nonetheless, let's go ahead and jump into it. The first thing I want to acknowledge is AMC stock was obviously beaten down like a dog today. Down over 6%. There's no clear specific reason why. I will say off of face value, AMC stock has went up a lot recently. From the low at $7.05 per share, you are still up 44% from the low. So maybe you're just giving some of that back. If you want to put on a tinfoil hat, maybe earnings are going to be bad and someone knows about it. Maybe there's something negative coming. Who knows? That's only speculation. But you did give some of the gain back, and that is pretty normal when you do go up quite a bit. The last, 3 days or so, you were up almost 9%. I believe that was Friday. And then yesterday, you were up, well, I guess technically Monday. And then Tuesday, yesterday, you were up about 7%. And again, today, you were down about 6%. So you're giving some of that back. Not a big deal in my personal opinion. You actually did get some pretty good things for stocks, I would argue, from the Fed. There was good, there was bad. Okay, Fed Jerome Powell said they're not too restrictive. And then he kind of walked that back. So they're leaving the door open to do more if they had to. That's only going to happen if the economy comes in, the data comes in really strong, or if inflation really rockets higher. Probably a combination of both of those things. If you look at the expectations for Q3 GDP, they're kind of all over the place. Some people think it could come in negative. About 0.1% is the current estimate. Just a couple of days ago, the estimate was on the low end, about negative 0.8%. On the high end, you're positive, like 1.8%. The Atlanta Fed GDP now estimates about 1.2%. This has actually fallen from above 2% over the past about 36, 48 hours or so, ever since we got the last GDP report that was like 4.9%. So we are expecting growth to decelerate. Some investors are starting to expect more layoffs and a worsening economy heading into the end of this year. So that is a possibility. Now, what Fed Jerome Powell just said, if you look at just the headline of this article, it's pretty deceiving. It says Fed holds rates steady, upgrades assessment of economic growth. The only thing the Fed basically said was, the economy is doing well, right? 5% GDP growth for last quarter. That's obvious. But Fed Jerome Powell also said, again, like I said, we're maybe not at restrictive. He started to walk some of that back, and he said the risk is probably that they do too little as of right now. Now, he stressed that the central bank has not made any decisions yet for its December meeting, saying that the committee will always do what it thinks is appropriate at the time. He also says, quote, "This signals that while there is a potential risk for the Fed to do more, the bar has become higher for rate hikes, and we are clearly seeing this play out with 2 consecutive meetings of no policy action from the Fed." That was actually Allianz Investment Management. Powell says the economy has moderated. The post-meeting statement had indicated that economic activity expanded at a strong pace in the third quarter, compared with the September statement that said the economy had expanded at a solid pace. The statement also noted that employment gains have moderated since earlier in the year, but remain strong. There were few other changes to the statement other than a notion that both financial and credit conditions had tightened. The addition of financial to the phrase followed a surge in Treasury yields that caused concern on Wall Street. The statement continues to note that the committee is still determining the extent of additional policy firming that it may need to achieve its goals. The committee will continue to assess additional information and implications for monetary policy, the statement said. Now look at this chart. This is the federal fund rate increases, right? So since May, you got a rate hike in May, you skipped in June, you got a rate hike in July. So just look at May, okay? You raised 25 basis points. In July, you raised 25 basis points. That is 50 basis points in total. Now look at something like your 10-year Treasury yields. Let's take a gander at those together. Okay, let's go ahead and see 10-year Treasury yields. And since May of 2023, 10-year Treasury yields were about 3.69%, about 3.7% if you just want to round and get a clean number. Today, your yield is 4.72%. You were over 5%. So that means the markets had, and even in like the beginning of May, you were at 3.5%. So really the markets had increased 10-year yields about 1.5%. And the Fed only gave us 2 rate hikes during that time. That means the markets basically gave us like 4 rate hikes. 4 rate hikes on top of the 2 the Fed gave us since May. It's put a lot of pressure on the economy. And that is something that Fed Jerome Powell, acknowledges by adding that financial restriction or whatever he said. We can look again at the actual verbiage here. Why can't I find it? The addition of financial to the phrase following a surge in Treasury yields. That credit conditions, that's the only thing that was there before. And now they added financial and credit conditions had tightened. So starting to think like, hey, financial conditions, stocks, right? Real estate markets, your actual financial markets, right, are tightened probably sufficiently. They don't want a runaway 10, 20, 30-year Treasury yield, because what's going to happen then is you're going to break the economy, and that would not be good. Fed Jerome Powell did acknowledge that too, and that was probably the scariest thing out of the entire press conference, and that's when stocks sold off the most. As you can see, it was pretty volatile during that Fed meeting, and that was really it. This big red candle came, or these couple red candles came, and you gave all of those gains back, plus some, heading down to a new low you hadn't seen since the beginning of the trading day, because Powell said it's clear that long-term Treasury yields are not reacting based on Fed policy. So that just means your Treasury yields could just keep running if, obviously, they were going to keep not reacting to Fed policy. So that was important as well. Overall, it looks like the Fed is done. The Fed's done. That's clear. Unless something crazy happens, we're not going to get another rate hike. So that is good news. Obviously, we're going to have to wait and see. We do have some big catalysts coming up. If you look at treasuries right now, they are down another 7 basis points, down to 4.72%. This is boosting up stocks here in pre-market. The NASDAQ up almost 0.5%. I'm sure the Russell 2000 might have a pretty strong day tomorrow as well. Again, we'll have to wait and see, but the Russell was really the underperformer today, so we'll see if the Russell is the outperformer tomorrow. That wouldn't surprise me. That would be good news for AMC, and that's maybe another reason why AMC was maybe down 6% today. The Russell was like almost break even. Like, it really didn't do all too much today. A big story is Double Lines Gunlock says interest rates are going to fall as recession arrives early 2024. He says layoffs are coming. And he says, I do think rates are going to fall as we move into a recession in the first part of next year. The so-called bond king pointed to a few signs of an economic slowdown. Firstly, the unemployment rate, while still low, has been trending higher. Secondly, the key spread between the 2 and the 10-year Treasury yield has stayed inverted for more than a year and has recently started to steepen, which is a recession signal, he said. He also saw an initial wave of layoffs. Quote, I really believe that layoffs are coming, Gunlock said. We've seen hiring freezes and now we're starting to see layoff announcements. They're out there for financial firms and technology firms, and I believe that's going to spread. So to spread to, more areas. Now, the data doesn't necessarily support that as of right now. If we look at the ADP employment change, you did come in a little bit light today. You came in at 113,000 job ads. You were expecting around 150,000 job ads. So maybe that is a leading indicator to what that Friday jobs report might look like. It might be on the rough side. Now, your JOLTS job openings, on the other hand, came in way stronger than expectations. About 250,000 jobs stronger than expectations, 250,000 jobs stronger than expectations. You were forecasting 9.25 million job openings. You came in at 9.55 million job openings. This is about 50,000 job openings higher than where you were even last month. So it doesn't look like the job openings are actually falling. If we do take a look at just the course of job openings, right, as you do head into that recession, like you seen back in 2008, you tend to get job openings falling as you head into that recession, and then by the time job openings are like really low, you're in a pretty bad situation. So you still have a lot more job openings than pre-pandemic. Pre-pandemic, you were at like 7 million job openings, and a lot of people thought that maybe we were going to go into a recession at some point in 2020 anyways, and then boom, you had the Rona. But if you look at this, and if you actually wanted to kind of chart this out, maybe we could do a little bit of that here for you. Then you will see if that works for us. We could do like a ghetto chart here, I guess. Let's see. I mean, if you want to get a little technical on it, I mean, it is trending downwards. Okay, so we'll see what ultimately does happen, but yeah, I wouldn't say you're in the clear yet, just because you did have some strong data reports that kind of shows the labor market is doing okay, or the job market is doing okay. Now, coming tomorrow, you're going to have some big catalysts as well. Now, for data, you're going to get initial jobless claims, non-farm productivity, unit labor costs, continuing jobless claims, factory orders excluding transportation, 4-week bond auction, and an 8-week bond auction. That is it for the markets. It's not going to be a big deal as far as that data in the morning. The markets are probably going to be pretty bullish from Fed Jerome Powell. Now, earnings coming tomorrow, pre-market to a lesser extent, but tomorrow and after hours will be big. Apple is your big dog. If Apple crushes earnings, stock's probably going higher. If Apple misses on earnings, the stock's probably going higher. That's just how Apple rolls. Tim Cook has a way of words that, I mean, he's definitely the best investor relations CEO I have ever seen. Even if Apple misses on basically everything, Tim Cook will come out and say, we're expecting good things, there's solid demand. He'll say a lot of things that are optimistic without actually giving you formal guidance. Apple has not given formal guidance since the Rona. That's exactly why. Because they just smooth everything over with Tim Cook on the earnings call. So Apple's a tricky one. There is always that chance that Apple does meet the Grim Reaper if things were to be really bad, but I'm not so sure. I guess fun fact though, for anyone that is kind of trading Apple earnings, I do have a trade on Apple earnings that I have for free. So I do have a trade on it, but I'm just trading profits. I don't have a lot of money on this. I have not seen one single person with the new iPhone 15. I have not seen a single person with it. So I'm going to be shocked if the Apple 15 has really good numbers. like utterly shocked. I literally have not met one person that has the Apple 15 or the iPhone 15. I want to see, is it like worth getting? Is it like no difference? I want to know, and I can't find anyone that has it. So I would say that's arbitrarily probably not a good sign. So we'll see. That's your big catalyst coming Thursday and after hours. And then on Friday, you're obviously going to get your jobs report. We'll highlight this a little bit more tomorrow as well. Non-farm payroll report expected 180,000. Unemployment rate expected at 3.8%. Again, lower the better. If you start to see your economic data really falling off a cliff, the Fed is going to start cutting rates because it is an election year coming up. And if you're the government heading into an election year, you already got super expensive mortgages. People can't afford to get a house. People can't afford to get a car. If you start to see a slowdown in the economy, I think it's pretty clear that you're going to put the economy over short-term inflation when inflation is really already conquered. Let's be honest, there's not that much inflation out there now. Prices are just high, and they have been high. Now let's take a look at the option activity specifically for AMC stock. You've seen 8 orders today totaling $287,000 with a positive order value of 64%. Now, I really don't know, what to expect throughout the rest of this week. I think AMC stock is going to do very well. If you take a look at the option activity, open interest for this week is 62.33% calls, 37.67% puts. If you look at the Stock O tracker data, it's pretty clear as well. You got 22,000 calls currently in the money, 54,000 calls out the money, 5,000 puts in the money, and 41,000 puts that are out the money. I think it's solid that you did have a little bit of a resetter today. AMC stock held above $10 per share. You're up 0.75% in after hours. That is also great news, in my personal opinion. You did not continue, to kind of fall. And AMC is holding its 8-day as well as its 50-day moving average as support. So, that's good rather than not. But I think it really depends what happens with Apple earnings, with the data on Friday, and how yields trade from here. If I were to imagine, it's probably going to be a pretty solid day tomorrow, given even in overnight trading, yields are down like 7 basis points. That's a pretty big fall for yields, and it looks like markets are getting a little bit excited about that one, guys. So that is going to go ahead and do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comments section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.